Good morning, everybody. Just here to do our morning analysis. I apologize in advance if there's a little bit of white noise in the background. When I got to my office this morning, it was very stuffy and hot in here, so I have my air conditioning and a fan blowing, and so I apologize if you can hear that a little bit. So anyway, yeah, Friday was interesting. We kind of closed with a nice little rally at the end of the day Friday. This did take out my hedges that I had on. So I am no longer hedged in the market, and I actually loaded up on some other long-term long plays. There's a couple things I do want to show though, but first let's just take a really quick look at the, so this was Friday's price action. This is a 30-minute chart. So basically everything, right here, this is Friday, kind of the cash session. This is the overnight. We had that weird gap down after the close on Thursday. Still don't really know what that was all about, but no big deal anyway. And then last night we opened with a slight gap up, and things look pretty good, but we're actually still this yellow. We've got two big ranges that I think we need to be super aware of, okay? And these stem from Thursday. So Thursday morning opened with a little spike down and then a big rally and then another spike down and then a rally back up. And we just sort of had this kind of balancing day with a lot of inside price action. So the first thing we want to do is be aware of that big, from the low to the high, that big swing. So that was a huge upward swing, okay? Basically this move right here. And then off of that, we then had another really big downward swing, basically this move right here. And so this teal channel that I have is from that upward swing, right? The low to the high of the upward swing. And then this yellow channel is the high to the low of that downward swing. And what I want to point out is just that everything since Thursday morning has been inside of that one big swing. So all of our price action since 10 a.m. on Thursday has been inside of that swing. And I think that is really important to recognize and understand. And then we've not only been inside of that big swing, but then we made that next little swing down that ended, at 10:30, right, or 11, and we've been inside of that since, again, still the AM session Thursday morning. All of our price action has been inside, with the exception of in the pre-market at 3 o'clock in the morning, which was basically the open of the London session overnight. We had a spike up, probed this yellow channel, and then a hard rejection from it. Okay, so sellers came in really hard there and pushed that down. And that has been essentially the story of the markets for the past little while. We keep making these probes up and then hard rejections down. We're again continuing to build value up here. So I think overall, still, when we look at the bigger picture, which we're going to do in a minute, still, I think long term we're looking very good. Hopefully, we'll get a rally soon. And I think there's a Fed meeting this week, so maybe we're going to be flat until that. I'm not sure. We might just be choppy until the Fed minutes come out, and then we'll have to see how the market deals with that. I'm hoping for a bullish rally at this point because again, I closed my hedges, and I'm not sure if I'm happy about that yet. My hedge got just barely stopped out on the very last minutes of Friday's trading, and now we would actually be back inside of my hedge was on the Nasdaq, so we'd actually be starting to come back down inside of the range where my hedge would actually still be live. So depending where the market opens today, if I hadn't stopped out Friday, I may or may not be stopped out depending on where the market opens. Going back to the S&Ps, because that's our usual analysis, the one thing I really want to point out here, okay, there's a couple ways to look at this, but if we look at our volume profile, okay, we have value here. And regardless of all the price action that was very bullish on Friday, got us up above this stuff, it didn't change the value of market participants, or where market participants perceive value. Okay, our point of control essentially didn't change at all. So if I'll draw another line here at the point of control, which right about here, give or take. So we have our value area high, value area low, point of control, and I want you to just see this. Okay, whoops, get out of this. If we take, so at the start of this, we were a little bit lower, but again, value was still pretty darn close, right? Like a little bit there. We've moved value up a little bit as price action came over here. But if we look, even before we started building this price action, see the point of control was already established. This would have been Wednesday yesterday. Our point of control, you know, even Tuesday, it was already moving up. By Wednesday, we had established the key level at around 42, 28, let's call it, right? And that would have been, Tuesday to Wednesday last week. And then even though we had this big bullish spike on Thursday and a lot of the price action moved up, it really hasn't changed the value of price action virtually at all. Point of control, which meaning the majority of contracts traded, is exactly the same as it was at the end of Wednesday before we had this big bullish price action. So this, while price, if we only analyze price, right, if we only focus on price, this looks bullish and this looks bullish, right? All this price action up here. But when we focus on value, we actually see that very little has changed. Now, that doesn't mean bearish by any means, but it means that there's no real sign that we're like totally ready for a big rally yet, right? I use my TradingView account for paper trading, by the way, so you can see some of these little arrows on here. That's just where I took little paper trades. Took one in the pre-market this morning on S&P. I actually set this order last night just to get a little 1 point scalp off this level. And I have a open trade in my live account off of this level, 42.30, and not expecting a big reaction. I'm just going for a small reaction there just to see if I can get a little scalp when we come down to that level. So this one worked out well. I only had a target of a 1 point, had a 1 point stop, a 1 point target. I had 12 contracts because the stop was pretty tight, and in the one, really in a single candle, we just went down and right back up. So that worked out real well. And we'll see if we can get a thing here. I have a bigger target here of about 3 points and also a bigger stop. So we'll see if this plays out. Again, this is in my live account. Depending on how price action looks as we get towards the market open, I may or may not keep that order live because I don't want to risk getting ticked in during the opening volatility. But, hey, if I get an entry soon, maybe I'd take it. Otherwise, I'd wait till the noise of the market open settles down. So really a boring overnight. Like this, I was like, oh, wow, what a great open. And then we just kind of did nothing. Again, a little spike up, rejection, and of course, now we're falling. So definitely stuff to be aware of here. The other thing I like to be aware of is just some of the session volume, just so we can get a bigger idea, again, of how price and value have migrated. And what we see is a lot of overlapping value, right? So we just see, again, not a lot of change in the market. On Thursday, we did have value moving a little bit higher for that day, but still very much overlapping. And then, of course, Friday, value moved much lower, again, back into that same kind of range. And look at these point of controls. They're just not really going anywhere. Right now, for today, we are establishing value above Friday's value. And if this rejects down here and moves back up, then that could be a sign of, again, some bullish price action. Again, the fact that we are establishing some price acceptance and volume up here is also promising for a breakout above these levels. But what I don't like is that we attempted the breakout, came back down, and then broke through all of this support. There's quite a bit of support being established here. Now, this could just be a probe. We could get a little buying tail down here where the buyers step in and push price back up. That would be a good sign. We might just be testing. This level might not even get hit, right? Like price may stop at this previous wick right here. This little guy right here, right? So that's terribly possible. Maybe I don't get this entry, but I don't like the risk on that trade. So I'm going for a little bit of a cleaner entry if I can. So let's get rid of some of this stuff and let's take a look at our big picture. I'm going to keep some of my drawings on here because a lot of them are still pretty important levels. But let's go back out to the 8 hour and kind of see what we're dealing with there. It's a little messy with these drawings, but so what we see again is things are starting to look bullish, right? Like this really, price really looks like it wants to kind of curl here, you know? So I'm hoping that we can start to really, again, we made a new high Friday, but barely. So what I'm really hoping is that price can start to establish a little bit of a better momentum for a rally, because it's just been a really boring few weeks. Really since the end of May, we've just been so sideways and a really relatively tight. I mean, we've been sideways, since April, but some nice big swings in here that you can capture some good moves, especially for swing trading. Throughout since the end of May, I think swing trading's been really tough. I haven't personally been doing a lot of swing trading throughout this stuff. I've just been scaling in and out of my long-term stuff and hedges. So this is our previous high, probably an important level to be aware of. And we probed it, kind of fell back down. We're probing again. I think we really need to establish ourselves over that high, because that high's been a sticky little guy for a while. We had this rejection here from the sort of like key level within this reversal. This was a strong reversal, so we found a key level in here, and this rejected really cleanly right off of that. And then on the second attempt up, we started to push our way back through. So basically what we're seeing is rejection from the highs and also rejection from the lows. All right, very tight ranges. Again, attempt to probe lower, rejection back up, attempt to probe higher, rejection back up. Even this is a little small rejection to probe lower. So I want us to stay above this red channel. Okay, this purple one is not really needed anymore. We can clean up our chart a little bit. I'd like us to get and stay above the previous all-time high. Right, we probed it, but not very convincing, at all. So what do we think could happen? Oh man, that's the sort of the question of the hour, right? What do we think could happen here? Let's zero in a little bit and just see if we, and bear in mind, I don't plan these analysis ahead of time, so I'm doing this all real time. You're kind of seeing my thought process. So we've been in this range for quite a few days up here, right? Since about June 4th. And of this entire range, we have this nice kind of key level here, this point of control here. And again, we're going to mark that off. I think that's an important level to be aware of, right? That's the point of control of this entire rotation that we're in. And then we attempted to spike up and rejected. We're still inside the value. Well, we're just above the value of this rotation right now. So if we can build value up here, then good, we're ready to rally. But if we just fall back into this stuff, then just get ready for more sideways price action, where you should be looking to, buy the extreme lows and sell the extreme highs. Now, what happens if we break down? What happens if we break back, below this yellow channel and then potentially back inside of this red channel? Where would we look for price to fall to? So I would look at, where was value in here? So we might see if price stalls, somewhere in this area. And we might even look at, just this rotation that occurred before the bullish push, right? Which would give us actually a little bit of a lower level, maybe a little bit better risk reward on that. We'll kind of see what happens, but this hasn't been tested, right? None of this has been tested, so it's totally possible that we come back into that. After that, if we don't come down to those, or if we blow through those levels, then I'll be honest, I'm not 100% sure. I'd have to see how price action unfolds at that point. Got this stuff that occurred in here, this little bit of rotation in here. Not sure that that's really significant enough to hold price action. Perhaps it would be a good place to look for reversal towards the bottom of this channel. The other place that I would be looking at, the other zone that's interesting to me, would be this zone down here where we look at, this and sort of a bigger supply and demand zone of like that. This one's so big. This is like the reason I'm not really sure about this one is because technically, if we're going to really draw this as a supply demand zone, it's like this massive thing. And even though price hasn't hit our key level, it's certainly reacted to the top of that multiple times. And so that may be dealt with at this point. If we come down in there again, we could plow right through that. I really have to just look at the price action at that point in time. I think it's a little bit, we'd be getting a little bit ahead of ourselves to try to predict that too much. We want to be careful about having too much of a prediction. So, not like a ton to report today is what I would really say. Because nothing has really changed. Again, nothing's really changed. If we look at sort of our big picture, it's all just kind of the same. And basically, we just want to see if price is going to hold in here. I would not be surprised for price to come down here. That's why I have that level in my live account. You can see the trade down here. All right, so my entry is at 30.25. And then I was just looking for about 3 points there. Again, this is not a recommendation to buy or sell yourself. Certainly, you have to do your own research, make your own risk analysis. Only showing this for educational purposes. I am not recommending that you blindly jump into this trade with me. I have my own risk tolerance and my own style of trading, and you need to have your own too. So this is strictly for educational and entertainment purposes. But I do like to show, that I do trade these things live, and I have this order just sort of sitting here, and we'll see how things sort of pan out at the open. I'm sort of doing a thing this week. I had a little bit of a rough trading week last week. I felt like I was a little bit all over the place. I was playing around with different ideas and different risk reward. And of course, I should have been doing that. If I'm going to play around with things, I should do it in my paper account. But so I ended up down on the week, which is, I think, probably the first time I've had like a real down week in a while. So I felt kind of bummy at the end of Friday. I just didn't feel like I did a good job trading the second half of the week. I started the week strong. The second half of the week, I just felt like I traded poorly. So this week, I'm going to try to just keep things pretty strict to my rules. And all I'm going for, I'm going to keep my risk reward at a 1. And sure, I probably could grab more reward on some of the trades, but basically I'm going to keep it at a 1. And, my goal is if my analysis is good and I have a 1-to-1 risk reward, I should be able to do better than a coin toss, right? So if you have a 1-to-1 risk reward, you just need to do better than 50% accuracy. And if you can't do that, then you probably need to go back and look at your strategy, see if you need to adjust anything, not just like one bad week necessarily, but at the bigger picture. And I think if you're a newer trader, I think starting with a 1-to-1 risk reward also is a good thing, because I think people forget that if you go for larger reward, right? So if you go for a better risk reward ratio, while that may be better in the long term for your account, while you're starting out as a new trader, psychologically that could be challenging, because as a general statement, the more reward compared to risk, the lower your strike rate is going to be, meaning you're going to win a lower percentage of trades. And then, of course, vice versa. And as a general statement, there are some traders, especially in the world of day trading and scalping, who will take negative risk reward, meaning that their risk is greater than their reward. Nothing wrong with that if it works with the strategy that you have outlined. But the problem when you're a newer trader is you can have a great day and have a bunch of wins, and then you have one loss. And that one loss can take away all of the benefit of those wins. And psychologically, that's really tough for a lot of people. That's really tough. Like, you were feeling good, and then you made one mistake, one loss, and all of your profits went away. That can be a hard pill to swallow when you're new to a strategy and you maybe don't have like full confidence in what you're doing yet. So I think either of those extremes from an emotional standpoint can be problematic for newer traders. And so I, a lot of times, will recommend just a one-to-one risk reward when you're starting out. And your goal is just, get 100 trades under your belt, especially if you're day trading. It doesn't take long to get 100 trades when you're day trading. Get 100 trades under your belt in your paper account or using very small positions with a one-to-one risk reward. And your goal is to be right more than 50% of the time. And again, basically we're saying, is our analysis really valid, or are we just taking random stabs in the dark? Because if you have a one-to-one risk reward and you take a lot of trades and you don't end up with net gain, then we might need to adjust our strategy a little bit because you're having worse odds than a coin toss at that point. And we don't want to end up in that position. I mean, even if we roll with the assumption that the market is completely random, if we place trades with a one-to-one risk reward, over the big picture, we should, in theory, I'm not saying this is what will actually happen, but in theory, we should be somewhat break even, right? We should be kind of 50-50 because that's the way coin tosses work. Maybe not after 10 trades, maybe not after 20 trades, but 100 trades or so, we should be somewhere around 50-50. So if you're doing this, you've got a one-to-one risk reward, and at the end of 100 trades, your strike rate was only 30%, then we need to, review our trade journal, review our notes, see maybe what we were doing when our trades were working and what we were doing when our trades were not working, and then make any adjustments that we feel like we might want to make. And I would also, at that point, strongly recommend that if you weren't doing those 100 trades in your paper account, that you go back to a paper account and practice until you see that you have a clearly defined edge, and then go to your live account, start with small positions, build your confidence, increase your position size. Not necessarily increasing the frequency of your trades. You want to increase your position size as you gain confidence. So this is what I'm looking at now. Again, we'll kind of see how the market unfolds. I'm sort of big picture bullish. We caught that little move wherever it was, probably somewhere around here on the paper account. That worked out well. And then we'll just see. You can see I haven't taken any trades yet in my live account today. But if price does come down here, I'd be interested in initiating a long. So yeah, back to this. That's kind of all I'm looking at today. I don't really have any major upside targets because this was an all-time high, and then we have just open skies above us. I don't know. I mean, this just doesn't look super promising to me. Every time we've gotten up here, sellers have just stepped in. There haven't been many buyers left. So as we're getting up here, there's just not a lot of people willing to buy. We'll see. I'd like to see us, if we reject down to here, come back up and continue building. At the very least, continue to build value up here in the upper end of this yellow range, the upper half of this teal range. I'd like to see us get out of this larger rotation. Another way to look at that is I'd like to see us move this value area and move this point of control up. We haven't moved it up since last Tuesday. Okay, so it's been a week that, although we've had some really volatile, crazy price action, especially after the inflation report last week, we got some bigger swings, but value is relatively unchanged. Okay. Now if this happened during the open market cash session, it probably would have moved value, but it's happened in the overnight, which means volume was lower. So less contracts, not that many contracts were traded. We do see, if we look at this, we had this other sort of area down here, and we have this buying tail, right? Every time price pushed down here, we got pushed right back up. And we see that there's less of a tail at the top. So we do have some buyers up here compared to down here where there is virtually nobody else willing to sell below these levels. So again, I'm still optimistic, but I'm not optimistic that I'm not going to be bored. I guess I'll put it that way, right? I'm optimistic. I think price action is still bullish, but I think price action also right now still looks really boring. And just be prepared for more range days, or more of these days where there are some good trends to follow, but those trends are inside of very broad ranges. And so you can scalp You can do trend following scalping, right? Like you could have done trend following here, you could have done trend following here, you could have done trend following down here. In fact, we took some nice trades down here. But you can see that if you don't know how to trade a range, then you know these little times where we were doing trend following, right, where we had maybe trend following opportunities, are really like a small percentage of the time that the market has been moving, right? Maybe I don't even think in here there was really any trend following opportunities. So you've had like these three little moments, these three little moments where you could have done some trend following scalping and probably made some good money. Maybe here too, depending, you know. But otherwise, there's been so much sideways price action, and we need to be definitely vigilant of not getting caught up trying to, follow this trend to go long when really we're just pushing up in the top of a range. Same thing here. We want to be careful about following this trend to go long when really we're just pushing up in the top of this range. So we'll see how things unfold. I'll be trading throughout the day. You can join us at dpmtrades.com. We have a free Discord channel you can join. You can hop on screen share with us when I'm day trading. You can post individual stock names that you want assistance with analyzing. You can post your own trade ideas. And then, of course, we do have the paid section that if you want to, you can join. We do send out alerts when I take swing or long-term trades. Again, not for the purpose of you following blindly along. I don't ever recommend following a quote-unquote trading guru's trades. I think even if the person is an excellent trader, it's just my experience is that most people don't end up getting the same performance as the guru did, likely because you either didn't get the same entry or you didn't get the same exit, or maybe you didn't take all of their trades because you didn't like the way some of them looked, and you don't get the same edges they have. So I think following other people's trades is really good from an educational standpoint. I think it's really helpful to be able to look over the shoulder of somebody who's a bit more experienced and see how they are handling the market. But I don't think it's a good idea. Like if I post a trade, I don't think you should necessarily take that trade unless you've done your own research and it meets your own criteria and your own risk parameters. Otherwise, it's just for observation. It's just for observation. It's a way to learn. It's a way to see how somebody else handles the market. It's a way to see how somebody else handles their emotions when their position is winning or when their position is losing. That's the benefit of trade alerts. I know a lot of people market them as, hey, you can follow my trades and make money. I think that's a little bit sketchy from a legal standpoint, but I just don't think it's smart. The majority of people I see that just take trades blindly because they saw somebody on Twitter say it or because they subscribe to a alert service or whatever, the majority of times I see folks doing that, they end up at a net loss. They get a couple big winners that keep them optimistic and keep them following those trades. But the majority of the time, and this was true for me, right? Because I did it when I was learning how to trade. I was joining all the chat rooms and getting all the trade alerts and trying to follow other traders' trades. And at the end of the day, I wouldn't say I lost money doing it, but I was constantly just kind of coming back to break even. I didn't really start to gain confidence as a trader and to really make consistent profits until I deactivated all of those alerts for myself and started focusing on my own strategy. So the alerts were helpful for me. I'm glad I use them to learn how other professionals trade. I think, but it's make sure it's a real professional, right? Now, for me, I'm a novice. I don't claim to be a trading guru or expert. I'm very much a novice, but I have a strong passion for teaching, and I really like building community. And that's why I don't push people into my paid service. It's there for people who are interested, but I really more encourage people when, like even my friends who are interested in trading, I just tell them to join the free chat room we have. because again, I think the best investment you can make is investing in developing your own strategy, figuring out what strategy works for your personality. There's a million and one ways to make money in the market. There's a number of strategies that work. My strategy isn't the only strategy that works. My strategy is what works for me. It's what works for my temperament, for my level of patience or discipline or my risk parameters or just my own psychology. And so I think you can follow other traders to get exposure to different styles. And then it's super key to then kind of find a style that works for you and then develop it into your own. You can take ideas from other people by reading books or watching videos or whatever, but take those ideas, roll them into your own unique niche. Find what works for you. So that was a bit of a digression, but I just feel it necessary because there are just so many of these, trading gurus out there. Every time I turn on any of my social media accounts, I'm bombarded with these advertisements of these guys that are like, come trade with me. I made X amount of money. And it's, A, I think those advertisements are obnoxious, but B, I think they're just really misleading. And I think a lot of them tend to lead people astray. Some of the best trading rooms and trading groups that you can join are going to be the guys that you've probably never heard of. They don't really advertise because they are professional traders. And the difference is, people often say, hey, if you're a successful trader, why are you running a chat room? And I can let you know exactly why a lot of successful traders run chat rooms. Because when you're first starting out trading, it's very exciting. And you can just sit in front of your screen by yourself and you're just thrilled, right? You get all these dopamine hits and it's just this thrilling thing. After you've been doing this for a while, like for me, I've been at this for a few years now. And again, I don't consider myself an expert, but I've been doing it long enough that, it's not as thrilling as it once was. And you start to feel a little bored, or sometimes you feel a little empty, right? Like, you're kind of benefiting yourself, but what are you providing back to the community or to society as a whole? And I think a lot of very skilled professional traders, they have that feeling, right? They're making good money, they're doing well for themselves, but there's that little bit of emptiness where I'm making money, but I don't feel a sense of purpose. And so there are some great chat rooms and some real, actual, like what I would call gurus, like some guys that are, there's guys that run chat rooms that develop their career in the pit, in the futures pit on Wall Street. These guys are the real deal. And they're extremely skilled and successful traders. You say, well, why do they run a chat room? Well, because who wants to just sit in a room all day for 30 years until you retire? You're just trading by yourself, right? It's like it's going to leave you a little bit empty inside. So, but when you see these guys advertising and putting so much energy into their marketing, I think that's a little bit of a red flag. A little bit of a red flag. Now, I don't mind the guys that have their own YouTube channels, right? And you might find their YouTube video, and in their videos, like myself, I plug my group. But when you start seeing the paid advertisements and when you're being bombarded with these paid advertisements over and over again, to me, that's a little bit of a red flag. Because if you are a successful trader, it's one thing to say, I want to build a community. It doesn't take much to build a community of friends and like-minded people by just participating on social media, right? But if you're going to invest all that money and time and resource into flashy advertisements and big ad campaigns on Instagram and social media, then I do a little bit question how successful somebody has been as a trader long term, right? Because, hey, you had 6 months of success. That's not really enough for me to feel like you're somebody I should follow, right? I don't think anybody should blindly follow me. One thing I do a lot in my group is I share videos and books from other people that are way more experienced than me. And I have no problem sharing, for instance, a video from a guy like Trader Dale. I use Volume Profile a lot. Well, Trader Dale is like the modern guy when it comes to Volume Profile. The dude's legit. He's the real deal. Somebody might say, hey, you're sharing his content, you're sharing his videos. Aren't you afraid that somebody might just go and subscribe and be a member of his group instead of yours? No, that's the whole point, right? If I can help steer somebody in that direction and my group is a place they can come where they can get, maybe exposed to the people that, kind of filter out some of the noise and the junk that's on YouTube. Hey, if somebody comes to my group and from there, instead of paying for my paid service, they go over to Trader Dale's webpage. I think it's just traderdale.com, and they pay for his service. Rock on. That dude's got way more experience than me, you know what I mean? And then you can come back to my free group and, see if there's somebody else maybe you should follow. I think that's kind of the difference between, the guys that are really doing it and the guys that are in it to market themselves. Um, I have no problem pointing out other people that I think are doing great work. So, gosh, that was a super long digression for morning analysis. But it's Monday, and I don't know. I guess my brain's just on that vibe today. So here we are. We're still kind of holding the same level where I took my initial trade. Notice, I took that quick scalp. Notice the second time price came to this level, it shot through. So once price reacts to a level that I have, I usually, just then go and remove the level. Um, but we can see that this was still, price is still holding here. So I'll just keep this on here for reference right now until price more definitively breaks through. We'll see. We'll see if price comes down here or not. If not, maybe we're ranging today. I don't know. Could be a boring day. We shall see. Maybe the open's going to give us something exciting. All right. Hope you guys have a great trading day. Join us if you want to. dpmtrades.com. It's free. and then if not, just rock on. You can subscribe to our videos at the very least. I hope you find the morning analysis helpful. I do point out key levels a lot that I think tend to be pretty accurate throughout the trading day. So especially if you are a day trader, and particularly if you're trading the indexes, hit subscribe and have fun. I think that's the most important thing. Have fun. If you're not having fun trading, then you're probably better off just getting a regular job behind a cubicle, I guess, at that point. All right, guys. Till next time.